Hello, everyone. Today on the final bar, we'll recap today's market activity. A nice up move rallying toward the close here, sort of following through from the strength we saw on Friday. Not eclipsing Friday's high, so notably a little weaker, but overall holding up okay. So we'll break down today's action. Otherwise, today we'll talk about a mystery chart, one chart you should know that you probably don't, and why it's important. Also, a new segment called the Final Bar Library, some books you need to read. Ladies and gentlemen, today this is the Final Bar. Hello, everyone. Good afternoon. Welcome to today's edition of the Final Bar here on Monday, November 11, 2019. My name is Dave Keller. I'm the chief strategist here at StockCharts.com. Happy to have you join us today and every day. This is our daily closing bell show, and the goal of the Final Bar is to think about today's price action, unpack the themes, the stories of today from a technical perspective, but most importantly, connected to the long-term trends. And it's so easy to get caught up in the short-term noise of the market, the flickering ticks, the intraday shifts. Let's think about the long-term trend and what today means relative to where we've come from, where we're going. Great to be back in the office here in Redmond, Washington. We were in Las Vegas last Thursday and Friday, so you heard some of the guest interviews that we had. We, I think, sat down with 10 to 12 different people over 2 days, capturing some of their thinking, unpacking their decision-making process, their chart routines, and understanding where they see the markets headed. So over the next couple days, next couple weeks, we'll really look forward to sharing all of those things with you. Also, just a quick reminder, pay attention to our YouTube channel because all the interviews that we did, we'll start releasing them through our YouTube channel as well. So you can interact with us here and also get all the stories there as well. Want to go into our market recap. So, Friday, and again, I'm talking to people on Thursday and Friday down in Las Vegas, and we're reviewing, the market at all-time highs and a resilient tape leading into the close on Friday. So, a lot of it was super positive, overall very constructive. We had a couple people, a small number out of the group that we spoke to, including attendees that were a little cautious, but for the most part, everyone was pretty bulled up in terms of their overall take on the world. Very interested seasonally, very interested based on the momentum, all of those things. So, today certainly seemed to be more of an up move, not eclipsing things, not moving to new highs, but overall holding up just okay. Let's think about today's price action and then how it relates to sort of the long term. So the S&P down just a little bit today, but that's coming off of an extreme close. So the gap down this morning for the S&P cash index slowly chipping away, pulled back a little bit in the afternoon after lunch. So below Friday's close. So that's why it's showing as a negative. But overall, certainly some accumulation during the trading days. This is one of those not really a raging, bullish day, but not anything negative, more sort of in the middle, I would say. Let's look at the chart of the S&P, the daily chart. So again, it's all about taking today's movement, connecting it to the long term. So, we're in a long-term uptrend. One of the charts I showed in my presentation Friday night was a 5-year weekly chart of the S&P. And the question is this market in an uptrend or downtrend? And it is so undeniably in an uptrend. Let's remember that. So even with a little bit of distribution, there has to be a lot of distribution to start looking anything but very positive here. And that's what today means. We have what's called an inside day, a lower high, higher low. This is where the range is compressed from one day to the next, sort of the opposite of an outside day or a engulfing pattern. So it usually represents a little bit of indecision. It's sort of a settling down, a ratcheting in of market volatility. But again, overall, we had more buyers than sellers after the gap down on the open. Let's look back to the members dashboard. We'll continue on just a little bit here. So we had, the S&P down 20 bips, 20 basis points. Mid caps, same thing, down about 20 bips. And then the small cap index, the S&P 600, down 30 basis points. So, again, not a huge dispersion there, not a huge differentiation. The S&P 100 up the most, followed by the others. But, boy, that's not a crazy spread from large to small overall. They're all pretty similar there. On a sector basis, if we look on the right side here, real estate, actually the number one sector. It's interesting because we've had this situation where utilities and real estate have been long-term leadership for quite a long period of time. They both have been rotating lower, but with the real estate index, we have a little bit of a respite there, a little bit of an upside move coming off the lows. But again, if you look at the last couple weeks here on the little preview chart, you can see it's not much, right? We're still not far from where we were on Friday. Overall, certainly more negative than positive. So overall, it's been sort of a mixed bag here. You have materials, industrials at the top, technology at the top of the list, up a little bit. Those are the three sectors: REITs, industrials, and technology up on the day. Energy, utilities down toward the bottom, the big movers on the downside. In terms of sectors and industries now, thinking about what moved. So the top performing industry groups were home construction, up very nicely actually from sort of a choppy last couple weeks. So a little bit of a recovery there. Also drug retailers. So two of the consumer groups at the top of the list. And then aerospace was actually a really interesting one. The Dow groups that we use actually break aerospace and defense into two separate groups. So there might be, some interesting names. You might want to review what's in there to really understand it. But, three of those groups all up over 2% on essentially a flat to, sideways sort of day. So plenty of up movements there. On the downside, what moved down the most? Non-ferrous metals, that's part of the materials group, gapping down a little bit. Media agencies, that's in communication services. That's, really a mixed sector. It's got, sort of the internet offense kind of plays, but also some of the traditional telecoms as well. And then the toy sector, that's actually a group that's been pretty beaten down at a time when most industries, most sectors holding up very, very nicely. This is a group that's actually been relatively weak or coming down. So those are the three groups that actually moved the index lower during the day. So, it's worth paying attention to. Again, if you're not looking at some of the industry reports, I'd encourage you to do so because there's a lot of potential movements in there and themes and names to dig into. Just to wrap up here with our market recap in terms of global equity ETFs and what's moved. Brazil, actually the top performer, up almost 1.4%, followed by Australia, frontier markets. These at the top, more commodity oriented, right? Think of Brazil as a big play on energy. Also Australia, more commodity oriented. So certainly a rotation to more of the commodity complex from futures. And at the bottom of the returns today, Hong Kong and the other Chinese ETFs, basically all the Asia ETFs. The FXI is what we usually use to pay attention to this. I wanted to make sure I hit on this quick theme. The China ETFs have all been incredibly strong in the short term, rotating above trendline resistance, breaking to new highs above resistance here. But today's certainly a gap down. So, those ETFs, the China ETFs, some of the Asia ETFs, really, a lot of speculation on the trade decisions, trade discussions, a lot very rumor driven at the moment. So I would assume you will see those at the top or bottom of the list, depending on what headlines we see today. So certainly make sure you pay attention to the longer term trends. So that's our market recap for today. I wanted to introduce next the mystery chart. This is a popular segment to show you a chart and then have you guess what it is. Later in the show, we will unveil what this chart is, why it's important, why you should be paying attention to it if you're not already. So the question to all of you, what is this chart? You can see it's the daily price bar going back 1 year, the 50 and 200-day moving average. We have the RSI here in black. And then at the very bottom is the relative performance of this security relative to the S&P 500 ETF, the SPDR. So if you have a guess on what this is, put it in the chat room. Later in the show, my producer will show me what you all guessed, and we'll see, unveil what it is and talk about why it's an important theme for you to be on top of. So that's our mystery chart for today. What is that chart? Next segment today is actually a new segment called the Final Bar Library. Producer Gretchen and I were talking recently about just different segments we've done, how we can keep the show fresh, keep it interesting, incorporate some new ideas. And one of the ideas we have was actually do what's called the Final Bar Library. I tend to read a lot, or try to read a lot for sure. And a lot of those are financial publications, a lot outside other disciplines, sort of Charlie Munger style, trying to think of a multidisciplinary approach. What can I read from other disciplines that will help me be a better investor, better trader, better risk manager with what I'm doing? And so what we thought is, to pepper in some of the books that I've read, talk about why I think they're important, and maybe some themes, some ideas to nudge you with. So today, actually, two books that we'll talk about as part of the Final Bar Library. The one is by Brene Brown. It's called The Gifts of Imperfection. If you've not read this book, she's written a number of books all related to, really psychology, self-help, mental states, how to approach thinking, how to think about what you're doing, how to set goals, all in a positive way. This book in particular is talking about imperfection. And the reason why I bring it up in the context of investing is I have found, and again, my career has been, investing my own money, but also more importantly has been investing or coaching and managing institutional investors and providing ideas to institutional investors, portfolio managers, analysts, salespeople, traders, and so forth. Also a good amount of financial advisors. And if there's one behavioral bias that I certainly see running rampant on the institutional side, it's what I call overconfidence, where you have a theme, you have a thesis, you have an investment opinion or a position, and you are so confident that you're going to be right that the problem is about half the time, if not a little bit less, you will probably be wrong. It's not a question of how well you analyze or how well you create a story or build a portfolio. Sometimes the market just doesn't do what you think it's going to. And so I think the best investors that I've known are the ones that know how to manage the risk side of it, how to admit that they're wrong and get out of it. So, I've struggled with perfectionism all across my life, and also as an investor, among other places. And so this book in particular addresses that idea, makes you, sort of acknowledge that you're imperfect and how to deal with that and how to plan for it and embrace it, actually, that being imperfect is actually okay. So I want to compare just what I read there with some of the things that I think about, when I talk to people about behavioral biases and how to approach investing, mentally, how to sort of get through this challenging environment as an investor, is self-awareness. That's sort of the first really important step. You have to have look in the mirror, really think about who you are, what motivates you, what your game plan is, what your process is, but have an open and honest discussion with yourself about how you're wired, right? How your mind works, how you're making decisions. Because if you can't admit that there are some imperfections there, you're a little bit hopeless in terms of your ability to improve your process and improve your performance, improve your returns over time. And I've never met an investor that does not want to get better at investing over time. That's kind of the game, is to improve your process and benefit from what you have learned and what others have learned before you. So how can you actually build self-awareness, understand your imperfections as an investor, and try to address them? This is the paradigm I tend to share with people. And again, I just gave a presentation down in Las Vegas on Friday, shared this slide with everyone, talked through, and I'll give you the very quick version here. I think of it in two ways. There's the mindless investor and there's the mindful investor. The mindless investor interacts with past, present, and future in a way that does not help improve results as a result, or to the contrary, it actually hurts your results, because all of those things are a source of anxiety, and I'll explain why. In terms of the past, the mindless investor ignores what happened, especially for painful, negative experiences. Now, as an investor, you're going to be wrong a lot. And I've known a lot of people that are very successful growing up. They get perfect grades in school. They're successful in athletics or music or art or whatever it is that they do outside of class. And then they get to an investing environment and they end up being wrong a lot more than they're used to. And some people just can never get past that mental hurdle of not being right all the time, as funny as that sounds. But you have to admit that you're having trouble. And part of that is having a healthy way of recognizing your past and identifying when you were right and what made that happen, and also when you were wrong. And so a mindless investor actually ignores the past. It's too painful to try and be honest with yourself about what has happened. Let's just focus on the future and not worry about the past at all. You fear the future, right? The future is a source of anxiety, a source of stress, because it's unknown, right? We will never know the future. And again, I've heard many people speak about a great many things. Anytime I hear someone talk about anything like a sure thing, holy grail when it relates to the financial markets, is lying. They're not being honest with themselves or with you, because it's just not possible. We, at best, are making educated guesses based on the probabilities and based on the past repeating or at least rhyming. And there's value in that, but we don't know the future. It's uncertain. And so a lot of people sort of fear what is going to come. We also worry about the present, right? So the present, anything could happen right now. The market could rip to the upside, rip to the downside. There could be a tweet or a news headline or a war or whatever that could cause valuations to shift immediately. And so the problem, that uncertainty about what's happening right now around us, is very difficult. It's overwhelming. So let's talk about, that's where it can be challenging. Let's talk more about What a mindful investor does, if you have a healthy relationship with yourself and you're able to communicate with yourself very well, then you're able to actually have positive relationships to the past, present, and future. So in terms of the past, you have a healthy, regular routine, a process to review some of your very good calls and also some of your more challenging calls. When have you been right and why? When have you been wrong and why? What is your worst trade over the last week? I challenge you to think about that right now. Jot down on a piece of paper, what was your worst trade last week? And then think about it when you have some time when the markets close. What happened? What could you learn from it? What could you do differently next? A mindful investor also plans for the future. Arthur Hill, my peer here at StockCharts, always talks about plan your trade and trade your plan. You don't have to worry about the future because you have a set of guidelines, a set of rules, a set of steps that you're going to follow to manage risk. Gaddis Rose, Grayson Rose also do a really good job with that in their book Tensile Trading and in their workshops, talking about you don't have to worry about it because you have a plan. Here's how you're going to go about rotating away from what's not working and into what is working. So have a good plan for the future that you can rely on. Finally, you live for the present. You have an awareness of what's going on around you. And that's where I tend to focus a lot of my coaching with my clients, advisors, and others, is thinking about how you have a proper market awareness or situational awareness of what's moving around you. And the good news, assuming that you're using StockCharts.com, is you have the capabilities to do each of these in a very positive way. You have a way to use chart lists and use annotations to capture your thinking and go back with some consistency and review why you made certain decisions at a certain point. You have the ability to use the charts and use the chart lists and use a regular routine to plan for the future and make sure you're aware of what's happening. And you have things like your member dashboard, which actually shows you everything that's going on, the scooter reports, all of that, so you know what's moving and you can start to understand why and how it's impacting your investments. So I would challenge each of you thinking of this, again, as an imperfect investor, how could you do better with each one of these? How could you better learn from some of your mistakes? How can you better have a game plan that you're going to stick with for the future? And how can you have a better awareness of what's happening around you? And I bet you could think of an upgrade or two in each one of those areas. And I think you're going to find that makes your routines a little more robust over time. So that book by Brene Brown, talking about the Gifts of Imperfection, really dealt with that mindset of accepting that you're imperfect. And once you do some of these tools that I showed you about, looking in the mirror and thinking of the mindless versus mindful investor, what could you do to start to improve those? The second book that I'll share with you, just to wrap up this segment, the final bar library, is a book called The Artist's Way at Work. This is a follow-on book to an original book that was very popular in the, I'm thinking it's the 70s. I might be making that up. Sorry, Julia Cameron, if I am. But she wrote a book called The Artist's Way. Julia Cameron did. You see her on the screen there. Mark Bryan is another author, along with Julia Cameron and Catherine Allen, wrote this book, The Artist's Way at Work. This is the first one I read. I then went back and read The Artist's Way a couple years later. It's all about unleashing your creativity. And again, I find as investors, a lot of times we can actually get stuck in our routines and you end up, and when I've coached advisors, we look at how you're making decisions. And after a little while, everyone knows, including you, that you don't have a perfect process, but you're just so used to it that you don't take the time to improve it. And this is what this book is trying to get you to do. Break out of your routines, break out of your established ways of thinking and help you think outside of the box a little bit. There are a number of techniques that she and he talks about doing with your process. The one that I'll share with you, just a quick, easy one, is to keep a journal. Now, hopefully, I'm not the only presenter at StockCharts that has told you to keep a trading journal. That is absolutely important. I would argue vital, because you need to capture what you're thinking when you're pulling the trigger, when you're making a buy-sell decision, to understand and be able to gain value and have it be a learning process over your investing career. But I would also say this is actually more keeping a journal of your own thinking besides just as an investor. So one of the takeaways from that book, one of the first things they have you do is what they call the 3 pages. Basically, first thing every morning, you get up, do what you need to do, and then you sit down with 3 pieces of paper and you fill them with whatever is happening in your head. And I will tell you, the first time you do it, you will become very frustrated by 2/3 of the way through the first page, because you think of how ridiculous this is. In the middle of the second page, you're questioning your sanity that you're taking time to write. And then on the beginning of the third page, this magical thing starts to happen over a series of days and weeks, where really great ideas just start pouring out of your head. And what happens, the theory is you're getting unclogged. You're getting your thinking unclogged from all this stuff, all this crap that's in your head. And then you're left with the ability to come up with new ideas and new creative solutions to things. So this is actually the picture from my notebook recently, and this is what I write at the end of each of my pages. And it's a series of reminders. This is remember rule number 6. Basically, don't take life too seriously. Stay foolish, which is something that boy, I'm totally blanking. The famous person wrote at the end of his final address, basically staying, stay foolish, stay, don't think like you have it all figured out. Stay foolish, be trying to figure things out. Steve Jobs, wow. That was a brain block, sorry. And always connect, thinking about the value of connecting with other people. And then it's other things that are important to me that I want to remember. So if you have not kept a journal, pick up that book, take a look at it, and think about how you can start to get some of your thinking unclogged. So that is the segment called the Final Bar Library. Part of this is selfishly for me to force me to continue to read regularly and think about what I can take away for all of you. But boy, I hope if I can give you a couple ideas occasionally, I'll feel pretty good about that as well. We're going to take a brief commercial break. We'll be back unveiling what the mystery chart is and why it's an important one for you to know. Be back in 1 minute.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
The human component around it with all the commentators that we have. I mean, look at the lineup with Murphy and Pring and Morris. These are household names in the industry. They're all tied to StockCharts.
People are always surprised with how many tools are on there that they didn't know about. 5 or 6 different methods for finding relative strength as an example.
Not only do we have these really great chart tools, but we have this amazing chart school, and you have these shows, and you have all these ways that you can learn.
Hello, everyone. Welcome back. This is your host, Dave Keller, here at StockCharts.com. Thanks for joining us here on the Final Bar today. Has anyone guessed what the mystery chart is? I have it up on the screen. We showed this, something important that you should know. Guesses, the computer industry, mostly Apple, not bad. You're actually pretty close there. So I promised you I would try to make these more difficult. We had less guesses, so I'll take that as a positive, that I'm stumping you a little more than before. But Team Final Bar overall, nice guess. This is actually the computer hardware industry group. And I'll tell you why it's important. Apple is included. Apple is the biggest weight in this. Well, not entirely true, but it is certainly it probably is the biggest weight, but certainly one of the main companies in here. Let's look at the actual chart. The way I found this is on the Scooter Reports by industry. This is actually the #1 rated industry group out of the 100-odd Dow industry groups. If you go down to the technology sector, you'll see computer hardware here. So we're going to bring up the chart. Then we'll look back and look at a couple of stocks real quick. So this is the computer hardware index going back for the last year. And again, a couple comments on this chart. Number one, if you looked at this chart and did not know that the market, we've been debating whether we're overextended or anything like that, whether we're rolling over. Recently people started to think about whether it was a pretty significant pullback, but you really don't see that on this chart. You see the resistance in May, the retest in August, but then, very resilient in the last 3 months for sure, holding up beautifully above 2 upward sloping moving averages, pretty solid, outperforming the S&P over the last 1 year by over 10%. But if you just go back to the end of last year, sort of the beginning of this most recent uptrend from the market low last Christmas Eve, it's up about 25%, maybe even more relative to the S&P over that period. So it's certainly been an area of strength. The reason why I think this is important, besides everything I just said, is that it's extremely overbought. And if you've listened to the show before, listen to some of my comments. With something like RSI, there are a number of different ways to use it. But one thing that I think is really important is looking at when it's extremely overbought, an RSI above 80. What that usually means is it's become overextended. It's up a lot, right? So the only way the RSI gets to 80 is if it's up a ton. It's been tilting to the upside. So you'd expect some sort of healthy pullback. That's totally normal. But because the RSI is so overextended, we would call it not just overbought, but a good overbought, meaning it's gone so far, so strongly you'd expect a little pullback, but it'll probably have at least one more push higher. You saw this back at the end of April. It became extremely overbought here, pulled back a little bit, but another gap higher. That ended up being overbought. You then have this divergence of higher highs, lower peaks in the RSI, and that's what started to tell you things are rolling over. But more often than not, when you see the RSI get up to the 80 range, usually means a resumption of the uptrend after the pullback. So I think it's interesting to note that the industry group, the strongest industry group out there, and also the group that Apple's a part of, is extremely overbought, suggesting maybe a little pullback, but overall still in kind of a position of strength. Looking back at the sector summaries, this is the sector summary page where you see the groups underneath it. If you click on computer hardware, then you can start to see the stocks that actually comprise the index. So if we sort this based on scooter rankings, we can see a couple small mid-cap names you may not be familiar with, some names that you certainly are. Apple is in this group, so if you click on Apple, we can see very similar chart, and that's why it was a good guess. Whoever guessed Apple, almost identical, right? I mean, very similar looks to those two. We can also look at Roku, which is another name in the mid-cap space, one that many know. A little less tilting higher here, but boy, up 6% today after a pullback just below to the 115 level or so. So that is a subtle reminder to remember the industry summary report, the sector summary report. Look at some of those groups that are really leading and lagging. And as you go through the list of names, I bet you'll start to find some names that you're less familiar with. So good guess. Team Final Bar continues to perform very, very nicely. So thank you for that. We'll keep making the mystery charts more and more complicated. We're going to finish up today's show looking at the Final Bar 3 and 3. As you know, at the end of every show, these are 3 charts you should know if you don't already. So the first one is the VIX. You probably noticed we talk very little about the VIX on the show, and I'll tell you why. I've not, over my career at least, found it to be a great signal. I don't tend to buy or sell when the VIX hits a certain level. For me, I bucket it more with some sentiment readings, maybe like the AAII ratings. Interesting to know. I think it's an interesting data point, but I wouldn't base a trading system based purely on that, because I think it a lot of times, for me at least, becomes more anecdotal. Now, I do know people that are much bigger into volatility. You should certainly see what they have to say, but that's just how I think of it. So I like the fact that the VIX has just hit 12. This is on Friday, popped up a little bit today. Hit a similar spot in July when the market topped, similar spot in April. This is before the VIX rallied, had a couple more weeks of upside before the market sold off May into the June low. So we're at a similar low volatility point that we have been at previous highs over the last year. And for me, that's what's of interest to me. So that is not on its own giving a raging sell signal, but at this point, I'm seeing a pattern and I'm seeing it line up. And so I'm very keen on the potential for a rally in volatility or an increase in volatility, a pull off in stocks that certainly would match the overextended, overbought condition we see in a lot of places. The second one is the biotech index, BTK. When I had one of my guests, Greg Gunther, a couple weeks ago, we talked about the biotech index. I think we were looking at the IBB together, which is one of the ETFs. But we talked about this rotation from distribution to accumulation, breaking above trendline resistance, now breaking above a price resistance. On Friday, real follow through to the upside, pull back a little bit today, which is okay. But overall, I think this is going to be an interesting chart to see if this is a retest of support before we rally, continue above the 200-day and further, or if that was sort of a false breakout and we go down. But I would say a resilience in biotechs would certainly be one more piece in what's accumulating as a bullish signal for stocks leading into year end. So I think it's a really important group to watch right now. Finally is the stocks versus bonds. On Friday, if I remember right, on the 3 and 3, whenever it was, end of last week, we looked at the TLT, looked at bond prices, and a number of my guests down in Las Vegas were talking about bonds versus stocks. So I wanted to make sure we hit this today. This is the ratio of the SPY versus the TLT. So going up favors stocks, going down favors bonds. And we rallied. This ratio has been going higher, hit the 200-day, pulled back, but overall has certainly resolved higher. So looking at this, looking at the price of the S&P, looking at the price of the TLTs, clearly favoring risk on, favoring stocks, and no end in sight at this point based on that ratio. So I have to see if that continues or not. That's the 3 and 3 today, and that is our show for Monday, November 11th on the Final Bar. Thank you so much for joining us. You can get to us on email, thefinalbar@stockcharts.com. can also get to us on Twitter at FinalBarSCTV. Going to be in New York the next couple days traveling, but we'll keep the show going and share some of the thoughts we heard in Las Vegas. For Redmond, Washington, Dave Keller, have a good night.